I have my
Genuinely.
king of dad jokes.
You are the king of dad jokes.
I made a post yesterday, and I don't know if you're seeing this now or whoever's seen it, but I made a post. It was like, you might be cool, but this will always be a little cooler. And it's a picture of a little tiny cooler.
Tiny cooler. I just saw that one this morning. Yeah.
It's, man.
It's excellent.
Yeah.
You are the king of dad jokes.
What makes this happy fast?
Well, let's talk about what's going on in the insurance business. Well, Jesus, I am so sorry. Welcome back, everybody, to the insurance panel. Nick Frumpkin and myself. It's not been a while, but it's been a while since we've been consistent, right? Yeah. And so we're busy. We had Michael on last week. Yep. That video should go up. Today's the 14th of Saturday. It should go up like Tuesday of next week.
Yeah, I think so.
A really good video. I really enjoyed talking with Michael.
Yeah.
He's a wealth of knowledge for how long he's been in the business. It's interesting. No, he had a really good perspective of young people coming into the industry, and he said it right. He's like, the average age of an insurance agent is like 55 or 60.
Mm-hmm. Yeah.
But if you look on the marketplace now, there's just a ton of 18, 19, 20 to 30-year-olds that are just flooding the market. Now, what's important is, if you are a 18 to 30-year-old, don't get led by fancy things to get you to sell something that you probably shouldn't sell. The young mind, the young business mind, is easily manipulated into doing multi-level marketing, captive insurance company type sales. I mean, I was a part of it. I worked for a captive company, and the culture was so good, I didn't want to look anywhere else. What's interesting is, like, Nick and I know each other for the longest time, and I was working for a company, and Nick was like, dude, you do not need to be working for that company. Like, it is awful. And I was so excited about where I was, and I was so brainwashed because of the culture that I didn't even listen to everybody online telling me the same thing, which is like, you probably shouldn't be there. And they were all right.
Yeah. I'm always of two minds, right? Because I do think that there's a really good place for captive companies. And I think that many situations can be good situations, but most of them are not, especially like, there's people that are at your old company that have been there for like 25, 30 years, doing real well, making high six figures, like, those people exist, and they're not making it entirely off the backs of a downline, although largely off the backs of a downline, right? It's mostly making money off of other people's money.
It's mostly because they got in first or very early into that company, and just through osmosis and being there a long time, they stayed around. And then over time, your downline in those companies, I'll just tell you this from my experience.
Hang on, I'm going to pause this for a second. Well, not to interrupt your thought, but like, let my dog is feeling trapped. And so we're gonna let her move for a second. Hold on. All right. After that brief interruption by my dog, who is too afraid to go past a computer wire to get off the couch. So you were saying?
Yeah, I was like, I was trying to say, those people that stay at those captive companies for a long time, they win long term because they've been there for so long that I'm trying to think of the best way to explain it. The guy at the very top doesn't want to lose their highest leg. Right. So they feed them people. Brand new agents coming in, they don't want to take them direct because of roll-up debt. and they stick them in a hierarchy.
Sure.
And they know that mid-level manager has been there so long that their pay through or their a little bit of back end money that they have coming in will not allow them to quit. And even though there's going to be a ton of roll-up debt, that top line manager knows that this person will take it on the chin. But if this person can sustain long enough, when those when that person quits and they do take the brunt of it, they do get a little bit of roll-up debt, their pay through, because it's a 2-year vesting period, ends up rolling to them. So it in turn grows it bigger and bigger. And then that's how those guys get these 6-figure pay throughs or salaries, as they call it.
Right.
They made us believe it was a salary. You're building your salary the first couple of years. You're building your salary. You're building your salary. And what most people don't realize is when they call it a pay through, in a traditional sense, if Nick is on a 100% contract and he goes in a house and he sells 3 policies and it's worth $3,000 worth of annualized premium with a 75% advance, he's going to get paid $750 times 3, whatever that number is, $2,300, right?
Right.
If you did that on the same other company and you sold $3,000 worth of annualized premium, the per household cap is $800. So the other, let's call it $1,200 that you're owed, right?
Right.
Is going to be paid to you over the next 12 months. So it makes your salary go up $100 a month for 12 months. But it's like wiping your butt with a hula hoop. The shit never ends because after those 12 months, that policy is paid out, even though you should have gotten paid it like Nick when you wrote the policy. If you don't continue to write that amount of business every single year, your salary just continues to teeter down.
Yeah, which is an interesting setup. The worst thing that I feel like has happened to the insurance industry is when it started to turn into a multi-level marketing scheme. And it is not that way in a lot of the industry. It is very much that way in final expense. It looks like it's getting that way in Medicare also. It's weird. I'm watching it happen. Like the Medicare field in the last 3 years has so dramatically changed in terms of what's being offered and who's in the marketplace. And
do you think it's I don't want to cut you off. Do you think it's because the final expense people are transitioning and they're trying to, it's almost creating this hierarchy scheme of multi-level marketing?
Because 1 or 2 really large final expense agencies decided that they wanted to go big into Medicare. I think that's a part of it. I think a part of it is also the deregulation of telemarketing restrictions on Medicare. It used to be that unless you were working directly for the insurance company, captive to a specific company, you could not telemarket Medicare Advantage plans at all. It was illegal. You could not sell Medicare Advantage plans by phone unless you were a captive agent who had a specific contract with an insurance carrier or 1 or 2 very specific call centers.
I was going to say, like, how long has that happened? Because there's a very large entity or Medicare producer out of Charleston, South Carolina, who's not he lives in the East, but his name is the opposite, and he's always falling down.
That's Medicare Supplements.
Supplements. Oh, I thought he was doing Advantage plans.
He might be doing Advantage plans now. I don't know. It's been a while since I've checked in with what he was doing. But he is one of the pioneers. I mean, we can talk about who we're talking about. That's Chris Westphal.
Yeah, Chris Westphal. Yeah, I know him. I know his son. I'm friends with his son.
Yeah,
he did business with me. He's a great dude.
Chris is a good guy, and Chris watches the show sometimes, and I like Chris. And and he was one of the pioneers of doing Medicare supplements over the phone. But Medicare supplements are not regulated the way that Medicare Advantage plans are. It's a different kettle of fish. It's much more like life insurance. And the money that you make on a Medicare supplement is different than a Medicare Advantage plan. Not better or worse, but just different. It just works differently. It's also more about renewals, but it's percentage based instead of flat fees, and it's a whole thing. But yeah, up until I want to say 2018, unless you worked captive for a specific insurance carrier, or you had there are two very, very, very large call centers that run they're currently running the Joe Namath commercials and stuff, that had specific licenses. You were not allowed to sell Medicare Advantage by phone because there were a lot of restrictions in place. Something like so many restrictions that an individual agent, it would be impossible. And those restrictions got relaxed in about 2018. A lot of restrictions got relaxed in about 2018. And so it's a very different marketplace for the agent looking to sell Medicare now, Medicare Advantage plans specifically now. And much the way that with final expense, where several people who were running Amway stuff came in and put together a large national alliance to create essentially the largest IMO in the country for many, many years.
Yeah.
But that was founded on multi-level marketing principles.
Mm-hmm.
And because they were so large, they spawned off a whole bunch of other agents who created their own agencies who were structured the same way. And because of the way they're structured and the way they advertise themselves, it is very easy to get the impression that that is all there is, especially if you're online. They spent a lot of money and got into the online advertising space early and the social media advertising space early. It's very easy to get the impression that that is just what insurance agencies are.
Yeah.
Everybody talks about uplines, right? Upline is a multi-level marketing term.
Yes.
There should not be a discussion of uplines. You don't have an upline. You have an agent that you're working for, or a general agent that you're working under, or a master general agent that you're working under, or an agency that you're working with, or a wholesaler that you're working with, or but upline is implying a relationship that's different than what it really probably should be if you're working in a proper insurance agency setup. I don't know. A traditional, let's not say proper, a traditional insurance agency setup.
Yeah, I've just seen a lot of recently when I talk to agents that are getting into the Medicare Advantage space, they say, well, this person, it's becoming this person offered me this and this person offered me this. So what are you going to offer me? And from what I understand, okay, is it's supposed to be you can't get a certain level unless you have a number of contracted and ready to sell AHIP certified agents.
Yes.
And so company, multi-level marketing company, let's just call it this, is saying, okay, Nick, I know that you're a good producer. You're planning on doing 125 to 150 applications this year during AAP. I want to give you $50 over street, even though you shouldn't get that because you have no agents.
Mm-hmm.
And then you go, well, so-and-so offered me 75.
Mm-hmm.
And then it becomes, okay, 75. And then you're going to offer 50 to your first guy because that's what you offered. That's what you got offered first. You're saying, well, I'm still making 25 an hour. The problem is these companies have to pay you, and then you have to pay agent.
Right. And that money is not Medicare commissions don't work the way that final expense and life insurance commissions work. So you're not, I mean, your agency can, I guess, pay you whatever they want from their own pocket. In sort of, there are a lot of rules and regulations on how they can do that also. But you're not getting paid direct from the carrier plus 50 on a deal,
right?
Unless you have agents under you. You're just
unless you're contracted the right way to have that.
Yeah.
Unless you're built into the hierarchy that way.
Right. Unless you have agents under you. I mean, like, even if it's just, you can't.
I know.
You definitely can't get plus 75 or plus 100 without having a lot of agents under you. That doesn't mean that your agency or your IMO can't pay you bonuses in terms of marketing money, because they're not allowed to pay you actual bonuses. But they can structure the way that you receive your marketing money that you get from them. But marketing money is not guaranteed, and they're not contractually obligated to give you any of that. And that can change in a heartbeat if they decide to.
To me,
how much do you trust the agency that you're working with, right?
Exactly. To me, it's these. What happened with final expense is everybody was happy with street level contracts like that you can go get, and then people started finding out that there was more, and then they started asking for more, and a couple agencies gave it out, and now every agency has to fold.
I mean. Yeah. I feel like with that conversation, I feel like, so commission levels are not nearly regulated in life insurance the way that they are on Medicare Advantage plans, right?
No.
You can hand out contracts above street, below street, like eventually a carrier is going to put a production requirement on you. But as an agency or an IMO, you have a lot of leeway in what kind of percentage of commissions you're willing to let your agents get. Because so many agencies built on this multi-level marketing platform start agents below street level. And again, let's define street level for anybody who's not been watching our videos for a long time. Street level is minimum wage. Street level is the level that any company will contract you directly with if you don't go through an IMO and they are taking direct contracts, and will, with no production, brand new minted license yesterday, never sold a dang thing in your life. This is the contract that they will offer every single person. That is street level. Okay, it's different for every company. It's usually about 110%. Sometimes it's 120%. It kind of depends on the company. There are so many for final expense. Expense. With term and other fully underwritten products, it's different. But for final expense, it's about 110, 120, somewhere in there. That's street. There are so many agencies, many of whom call themselves IMOs because IMO makes you sound fancy, but most of them are not actually IMOs. Most of them are agencies. And the difference is how you're structured. There are so many of them that start agents below street that once agents start realizing that, oh, I can move up to street, agents get trained into the idea that, oh, I can just keep increasing my commission levels.
Yes.
Forever, right? Which isn't really true. Like at a certain point, everybody caps out. Insurance companies are not going to pay more than 200% commission total, including to their own people who they do have to pay on a policy. At a certain point, you will have reached a maximum. Yeah. You cannot go out and get a 200% commission contract. No IMO can go out and get a 200% commission contract. you know, like you know, they've got to have some room for themselves. The insurance companies are in this to make money. But because of all of the people who start agents below street and the weird conversations around what street level is, and the weird lies that get put out about what street level is and what fair starting compensation is, and good people who I like and respect will tell agents all the time, hey, you don't deserve to start off at more than 100%. You don't deserve to start off at more than 80% because you need to get trained. And the reality is, like, my belief has always been, if you cannot make enough override off of an agent to give them street level contracts and train them too, your contract levels as the hiring agent are not high enough to be hiring sub agents. You don't have enough, you don't have a high enough contract level to be hiring sub agents. You know, if you're saying to me, I'm not going to go train somebody for 5 or 10% override, so I have to put them at, 80% or 100% contracts, well, then your contract levels aren't high enough to begin with. You shouldn't be hiring. You shouldn't be hiring sub agents. You know, it just is what it is. And there are people who will come out and tell me, oh, well, I give my agents a salary. Okay, great. Well, put them on a lower contract. You're paying them a salary. What do I care? Like, that's a different kettle of fish. You know, you've got W-2 employee agents, pay them 60%, give them $75,000 base salary. What do I care? It's a different conversation. But if you're hiring 1099 agents and you're providing maybe a CRM, maybe not a CRM, maybe a discount on a CRM, quoters, training, offering to do the occasional ride along, taking phone calls, that kind of stuff. The stuff that basically everybody offers. And you can't make like 20% on a street level contract that's a sub agent. I mean, why do you need to be making more than a 20% override? And I know for a fact that there are guys in these structures who are making 60 and 70% overrides on people because they can. And I don't begrudge anybody making a profit. Like, if you're going to be hiring agents, you're doing it because you intend to make money also. We're all in this business to make money, but
yeah,
at a certain point, your agents need to survive. And the agent that is making money every time he sells a policy or she sells a policy is more likely to survive long term. And this is not just me like spouting this off. Like, the success of agents who start at street level historically and statistically is dramatically higher than agents that start at 60, 70, or 80% contracts.
I wonder what that statistic is. Like, I no one's probably ever pulled that. I wouldn't even know how to. You're probably right. I mean, you have to be right in that. But I just wonder, like, if the fail rate is X percent if you start them below 100
as an independent agent.
Yeah.
Hold on, my child is talking to me. Problem with doing this on a Saturday morning.
I'm sorry.
I've just got life going on.
We do it on Fridays, but this last Friday we had it like scheduled for like 3:30, and I was like, Nick, you're gonna hate me. I was like, I'm so sorry. The ad turned out really well, if you're wondering.
Good. Excellent.
There's no better. Just a quick tip for everybody. There's no better ad that you'll ever get than if it's a client of yours that you've helped out that absolutely adores you. You just go, hey, will you do me a favor only if you found value in what I'm bringing to you? And they say, sure. And you say, hey, I would love it if you just told me about my service and what I've helped you out with. It doesn't have to be 30 seconds, a minute, Miss Jones, whatever you decide. And they'll do it. And because it's and if you put, just a little bit of video editing or pay somebody on Fiverr to do this, take that video, put their name, if they're okay with it, where they're from, and then put Nick Frumpkin's client, right?
Yeah.
And put it in the watermark. And you run that out an ad. It doesn't have to be super high quality. It doesn't have to be this, but it's just real and raw. And the client's like, Matthew went above and beyond. He helped me out a ton, blah, blah, blah. and then just run an ad with a lead form, and you'll get leads. And it doesn't matter if that lead costs you $15 or $20 on Facebook. When you call those people and they go, "What is this about?" And you go, "You remember Miss Jones online that was talking about the level of service that I gave her?" They go, "Yep." I'm the guy. Right. You'll close. I've done those, and I've closed every single person that I got in front of with like
it's
over $100 in premium. It is.
That's a high intent lead.
You have to, guys. If you're not running your own ads, like, you got to do it. You got to try it. I'm telling you. Like, I'm a big fan of, staying. Like, I'm a big fan of like stay in your lane, which is like buy leads, go to work, right?
Mm-hmm.
But if you've got a little bit extra, like $250, $150 for the week, learn a new skill, throw it on Facebook, and you might come out with something that's like absolutely amazing. And that's what Justin Thomas, a friend of the show, is like trying to teach people. Like, do not only depend on your vendors.
Yeah.
I recently became a lead vendor, which is weird. And I was talking to somebody about my leads, and they go, "Will you?" I can just see that so many people are burnt out about lead vendors, especially final expense lead vendors.
Mm-hmm.
They're like, "Will you guarantee that all these numbers will be right and these people know what we're talking about?" I'm like, "No, I'm not going to do that.
No,
I can't do that. It's impossible."
Nobody's going to do that. What are you thinking you're getting from your leads that you're
exactly
asking for these kinds of guarantees?
I'm also like, they're like, "Well, I need a deal, all this stuff. Like, what deal could you give me?" I give them a deal, and they go, "That's it." I'm like, "Look, to be honest, I don't even want your order. I can't take it. If you're giving me your last dollar and then you're expecting all these things, like,
yeah,
I'm going to get an email from you saying these leads are crap in about 4 days, and you're going to cancel it, and I got to pay you back, and it's not going to work."
No.
I don't know where I was going with that, but what I'm trying to say is, if you want a highest quality lead, make it yourself.
Yeah.
You know what you want out of a lead. You do the ad. Just sit in front of a camera and just talk and be like, "Hey, if an agent would just talk about what they know how to do in a house, if Nick just did his presentation in a house and like explained final expense life insurance, and then did that, like, Nick would get so many leads." Nick, you should do that. I'm telling you, it's great. You got direct mail leads, but it's whatever.
Yeah, right. Well, and the generating your own leads comes down to like a time value proposition for me. Like, the only downside to generating your own leads is it's time consuming. You got to take the time to do it. It's not that time consuming, and if you don't have a lot of other stuff going on, you probably should. It'll keep your costs low. But I am down to like trying to carve out little like 20-minute segments of my life that are just for me at this point. I'm not giving any more.
Isn't it crazy, like where we were like 2 years ago compared to now? Yeah. I mean, it's like I look at my schedule on a weekly basis and I'm like, I'm booked out for a month. Like, I know where I'm going to be at for the next month, like down to the hour. It's crazy.
Well, like I was talking to my wife about this literally last night. I was like, listen, I think that I have capped out on the amount of production that I can write without giving up time off. I write about $300,000 to $350,000 a year, depending on how good the year is going. And there's some of that that's not completely in my control, but I don't think I'm going over 350 without needing to start adding additional days in the field. And we talked about, with Michael in the previous video, like mental health is important and it's easy to get burned out. And I think anybody who's running appointments 5 days a week is on a path towards disaster, which is the type of thing that agency owners and people who are uplines and stuff don't like me saying, because they want their agents out running 5 days a week because they don't know which ones of them are going to fail and how many of them are lazy and who's really working. But if you're actually out there working, and you're running a field day that is 10 to 12 hours long, and you're not spending 2 or 3 hours of that sitting in your car reading a book and walking around Walmart and going grocery shopping and running errands. And like, if you're actually like seeing people all the time, the whole day, Like, you should be so tired on a Tuesday that if you went out, you would blow all your appointments anyway.
Yeah.
Like, you should be working so hard on Monday that by Tuesday, all you want to do is just rest and like chill. Because if you tried to go out and see people, you would be like, right? Yeah. And if you're doing that, you get a lot of time off. Like, really, it doesn't take a lot of hard days of work to be able to make a decent living.
3.
3.
2 if you get good.
Yeah. And so to bring this all back to like what we were talking about before with captive agencies versus independent agencies and stuff, this is sort of where I feel like the captive agents, if you're starting and you're learning with a captive agency, it is tempting for me to say people should start captive.
You've said it many times, actually.
Yeah, because captive agencies are not operating under a multi-level marketing structure, right? They're operating under a corporate structure. It's different, but most captive agencies, I shouldn't say all captive agencies, because there are many that are essentially MLMs.
Right.
But if you're working for an insurance company, not a captive independent. Captive independent is BS. Don't do that. But if you're working for an insurance company, they're going to train you. They're going to try to get you to succeed. They're going to try to give you tools and structure and support that you're not going to get, and psychological, like camaraderie, like other people that you're working with, and you've got an office, and like you're seeing people, or if you don't have an office, you've got a team that you're working with, or something, you know, and it feels a lot less like you're in this all on your own. And it gives you a foundation to work off of. The trade-off is you really do start at much lower commission levels. Like for any of those, you start off at much lower commission levels, and you shouldn't expect to ever go a lot higher. And that can be bad. I know, like, because I was in management at the captive company that I started with, you know, and they've moved me up into management very quickly, which is part of where all of my like negative attitudes about being a manager come from. I know the statistics that company got, right? And that company said, listen, if we hire an agent and we don't get them moved into management within the first 14 months, they will not continue to be working for our company by the end of year 2. We've got 14 months to get them from a producing street agent to having downline agents and running a team and being in management with a base salary for this particular company. Being in management came with a $75,000 a year base salary. That's not true everywhere, but with this company it did. If we don't do that within 14 months,
that person's going to fail.
That person will fail within 2 years. That's the statistic. They said like less than 5% of agents who didn't move into management within 14 months stayed beyond year 2. And so like their whole system was set up to identify potential future management and let everybody else, like, you know, go take a long walk off of a short pier. But that's really it. Like, I mean, it's
But I guess my question is, Nick, is there a way to reverse that in the insurance industry today, or is it just gone too far?
No, I think there is. Like, I think there are, I mean, and I know with certainty that there are agencies and IMOs that do this correctly.
Yeah, there are, but there's also so many that don't.
Yeah, right.
And to correct something that's drastically wrong, everybody has to do the right thing.
Well, the problem is most of the places that do things the right way don't have time or money or resources to be throwing at things like, well, yeah, to be, yeah, right. Like
no, let's just say like Scott, like,
okay,
Scott does it the right way, right?
Yeah, absolutely.
Does a great job. He doesn't have the time or care
no
to try to explain to an agent what's right and what's wrong. He's like, this is what it is, and if you whether you believe me or not, it's right.
So I can tell you, I'll tell you a story about the group that I work with. So we were just talking about on our weekly training call that we do have. There was an agent that has come on within the last 6 months who has joined our group and has been extremely successful. Kind of hit the ground running, doing really well, continuing to be doing very well. John Duggar told a story about him yesterday because he's been doing really well. And he told a story where he said, you know, this guy who watches the show, this guy, a couple years ago, when he first decided to get into selling final expense, contacted me and, you know, wanted to get some information about the industry and what do I suggest. And John said, you know, of course I suggested FEX contracting because that's what I think everybody who's serious should be. But, you know, I also told him the truth about what the industry is like, you know, and I had him talk to Scott, and Scott also told him the truth about what the industry is like. And doing his due diligence, this agent went and talked to like 4 or 5 other groups because, you know, that's what you should do. You shouldn't just hire on with the first person that you talk to, right? You talk to a bunch of people. And he went and he talked to like 4 or 5 other groups, and they did not tell him the truth about what the industry was like and what was realistic and what should be expected. And so he went with one of them instead. And spent about 18 months with that person before realizing, ooh, prominent agency. If I mentioned this agency's name, every person watching this would know exactly who they were. Respected agency. But he went to this group and after about 18 months was like, I'm not getting any traction. I'm not having success. I'm not selling anything. I don't know what's going on. And he contacted JD again. And JD said, well, it was like, you can talk me through what you're doing, you know, tell me what's going on with your stuff and I'll see if I can help you. And the end of that conversation, he ended up switching to get street level contracts, which he was not on at his other agency, to get a system that worked. And within like a month, he, you know, was pulling himself out of debt and doing well, and like things were going the right way. It is difficult to distinguish the people who are blowing smoke from the people who are actually good. And that's the hard thing. If you're a rookie in the industry and you don't know, I would hope that everybody that watches this show has learned enough from us that they would be able to tell the people who are lying to them from the people who are not. But then again, I know some of them don't because I know the choices that some of them have made. Yeah, it's tough. That being said, there are a lot of places out there that will do right by you. I would say things that you want to look out for are, and not just look, you know.
Yeah, sorry, can I get you off? It's not always the IMO's specifically fault. It's a sub-agency within that IMO that is telling somebody wrong.
Well, that's the thing. A lot of the time, yeah.
Yes.
Right. There may not be anything wrong with the organization on the whole, but this specific person that you've gotten placed with, who maybe you were not placed with them because you were like, oh, I want to work with them. You just were placed with them because geographically they're the closest manager to you or whatever. Or they were the one that was in need of an agent, the larger agency to screw you on that person's team. Like that happens all the time at some of these big places. So I would say the things that you want to look out for is when you're talking to agencies and IMOs, you want to find out what your commission levels are. Absolutely. It's probably not the most important thing, but yeah, you want to be at street or pretty darn close to it, and with a plan to get to street reasonably quick. But more importantly, you want to know who's going to be training you. Is the person who's going to be training you, like, how long have they been training agents? How much success have they had training agents? How many agents have they produced that are successful? Do they produce themselves? Somebody who doesn't produce themselves is not necessarily like, don't go to them at all, but like, you probably, if you're selling final expense, you want to be being taught by somebody who's selling final expense. So if they don't sell final expense, like, how are they getting you in touch with producers that you can talk to every day that are selling final expense?
Right.
Because you get rusty fast. And like, you want to know what your support structure is going to look like. You know, you want to know how does that work, you know? And you want to know if you can get released, right? But everybody's going to tell you they're going to
I hate the release conversation, because it's always like, every company is going to tell you, of course we release, of course we don't have contracts, but when it comes time, when you are a producer, let's just take this guy that you were talking about, and let's say that he worked with this very prominent agency that most people know about, and he said, you know what, I want to go work with Nick and Scott and JD and all those guys over at FEX. A lot of times that agency that said that they don't have contracts and they don't release will literally send you an email saying, sorry, we don't release.
Right. Yeah. Right.
And
that happens
a lot.
And they can decide on a case-by-case basis. You know, like we have a mutual friend that runs an insurance group who got into a fight with one of his downline agents, and that downline agent decided he was going to take his business elsewhere. And our mutual friend, to our shock and horror, said, no, screw that guy. He's not getting a release from me. Everybody else, I don't have a problem releasing it. This guy, nope. Nothing he can do.
Yeah.
Like there's I mean, you know, there's nothing he can do. So,
which is like
terrifying, right?
But then, like, when I was trying to explain to these people that don't release, like, the internet is such a powerful thing, because people are going to know.
Yeah.
That story's going to get told.
Yeah.
It's being told now.
Yeah.
Someone who's going to watch this is going to go, who's that guy that didn't release? You know what? I might tell him.
Yeah.
And then that's going to go, that's going to go, and that's going to go, and that's going to go. And it becomes this, you're this bad person that doesn't release. You do not want that.
No.
I've personally, you know, gotten releases from very prominent groups, and it's gone swimmingly well. And I've released to very prominent groups, and it's gone swimmingly well. Scott's one of them. So I was going to Scott, and they were like, hey, it didn't work out. I want to go over here. And there was no debt.
Yeah.
And it was done.
Not every organization's a good fit for every person, right?
No.
Right. Even if it's a good organization, it doesn't mean it's a good fit for you.
Correct. I tell people, like, most places will give you the exact same things as far as comp and as far as support and tools, so have you. I said, but when you're choosing the person you want to talk with, and just like I give all the same advice, Nick, I said, just make sure the person you want to work with, you gel well with.
Yeah. Yeah. Like,
you shouldn't ever resent or go, oh, I got to call Nick for help, or I got to call this person for assistance.
Right.
You know what I mean? Like, that person you should almost want to be able to go out with a beer with.
Yeah.
And talk, you know what I mean? Like, you should have a good conversation with that person every time. It should never be a mad or a heated conversation, ever.
Right. Like, I was talking to an agent the other day who was a female agent, and was talking to me about maybe starting doing Medicare with my group. And she said, you know, I feel more comfortable working with women in management. Do you have any, you know, females in management on your team? And although I do have a couple of resources that are female, I want to tell you, there's a couple of really good Medicare groups that are actually run by women. Maybe you should go work with one of them. Like, I might not be the right fit for you. Like, and that's okay.
Yeah.
Like there's like 3 or 4 really, really good groups that are actually run by women that might be a better fit for you if that's important to you, you know? I talk to agents all the time who are looking for a final expense home that I don't tell to come to FEX contracting because I don't think that what they're looking for is a good fit for what our group does, you know? And you know, it's,
And there's also the other thing that Michael brought it up is he's on West Coast and he has agents on the East Coast.
Yeah.
And vice versa. Like it would annoy the crap out of me. And I've told people that lived in California, like, Matt, I want to come work with you. And I'm like, it's gonna be tough, man, because the times that you can call me are very limited. There's a 4-hour window, 5-hour window. Like really, I'll pick up the phone for you if you're in a house at 4 p.m. your time, which is 8 my time or whatever the case is. Like, but dude, if you're calling me at 11 o'clock at night, like
I'm not answering that phone call.
You're gonna be mad at me because I'm not gonna answer. I'm sorry.
Right.
I might be asleep.
You're calling. You're right. You're in California calling me on the East Coast at 8 p.m. your time. You know, like, sorry. Work early appointments, I guess, if you want to, like.
Yeah, it's one of those things that is really not talked about is the geographical thing.
Right. And there's ways to fix that, and like, you know, I mean, but yeah, I mean, it's like all of this stuff is important when you're considering these types of things. And if you're new, you know, there's a lot of if you're new, try to find some place that is old and established, and has a proven track record of turning out successful agents. And it's really the best that you can ask for. And know that you might not get it right the first time, you know, and be okay with that. You are still in business for yourself primarily.
I went
gotta be willing to move your stuff.
Yeah, I went from captive to independent. My first independent shop did not work out.
Mm-hmm.
I went back to captive. I worked for an insurance company.
Mm-hmm.
And then I landed where I'm at now. So I've made 3 big switches for me.
Yeah.
Huge switches in my career. And it's okay. The place that you choose is not going to be, it may not be your final home, or it may be.
You don't know.
You don't know. But what you do have is time. You know, I guess we started this off with, like, if you're a young person, like, you're going to be doing this for the next 20, 25 years.
Yeah.
You got time. You don't have to knock it out of the park day one. No. And it may not work out with where you're at. And that person that you're working for, you know, might quit. And you don't have to stay with the organization you're with if that person quit.
Yeah. Right.
Yeah.
Yeah. I like, you know, it is tough, and it's a minefield it's a minefield for new agents, because the places that you will hear about and the places that are the easiest to find and know that they exist are frequently not good, friendly places.
That's actually a really good quote. The places that are easiest to find.
Yeah.
Or the ones that find you.
Yeah.
Look at that. Are probably not. Probably not. If you have questions, if you're like, hey, I'm talking to this IMO or this place or this agency, and you have questions and you want some super non-biased advice, from Nick and I, we both share the email, so you're gonna get a response, and it'll say blank Nick or blank Matthew.
Yeah.
Just go to the insurancepanel@gmail.com and ask us your questions, and we'll walk you through it. We'll give you the most non-biased advice we can. We're always trying to give you, from our eyes, the way we see it. We're trying to make sure that the 1,350 subscribers that we have that may be watching this, or the people that are not subscribed, are getting good advice when it comes to the insurance industry. It's a small niche in the final expense world, and now Medicare world. Technically, I guess we're both there. But we want to help you. The reason we made this channel is to just talk about what we know and love.
Yeah.
We're just 2 dudes, used to be 3, that work that that work for, you know, two separate companies who are just giving, you know, our thoughts on that specific day. That just want to help people out. So thanks again, guys. Make sure you like, comment, subscribe. Go ask us questions on the insurancemail@gmail.com, and we'll talk soon.
Talk to you next time. See you.